it's really, I guess, surprising that 5.9 percentage points of that 7.6 was delivered solely by household consumption. I think maybe school reopenings and
Yeah.
people just getting back to normalcy, and taking higher prices on the chin. Maybe when we see the next BSP Consumer Expectations Survey number, we'll see the savings numbers drop a bit more, because in this environment of rising prices, borrowing costs also on the uptick. It's difficult to see this lasting for much longer. So just really, I guess, 2 years worth of lockdowns and being stuck at home. People are just getting out and about, and they're not getting sick of it. They're not getting tired of revenge spending, and it's also feeding into other sectors of the economy. I think the second biggest contribution to GDP came from construction. So something I mentioned earlier, people who had been sort of putting off big purchases or putting off investment activity, like building a house or building a commercial building. These are now coming on stream, even if we're seeing higher borrowing costs. So they're going to have to take the increased interest payments down the road. I guess, basically just saying, we don't know when we're going to have the chance to do this anymore in the events of 2020. So spend now, invest now. The reopening is in full swing. But yeah, I guess the big question is how much longer can we take these higher prices? As you mentioned earlier, retail spending is still high, as evidenced by the third quarter earnings numbers of some of the restaurants. But yeah, I chalk this up to the resilience of the Filipino.
Exactly.
Taking this on the chin, high inflation, almost at 8%. And, we just continue to go about our business despite high inflation, despite higher borrowing costs. Hopefully this can continue. Hopefully there's some reprieve, but the economy is quite robust, at least for the third quarter.
You've got the agricultural problem issue. Even the damages of Paeng might not have been considered in the third quarter print. Give us an idea of whether this 5.2 or slightly higher than 5.2, median 6.1%, is something that we expect is a one-off in the third quarter due to higher inflation, or is this something that's going to be persistent? Give us more of a feel on what's going to be happening as we digest all of this agricultural impact.
Yeah, for agri, I think that will definitely have a downside risk to growth in the fourth quarter. Even the typhoon, I think the name was Carding, came in the latter half of September, or even the last week of September. So the impact of that will find its way to the fourth quarter numbers on top of what we saw with Paeng. So I think Carding had roughly about a 3.5 billion crop damage. Now you're saying, or now we're getting reports that Paeng had a much higher number and still climbing. So agriculture not likely to be a plus side in the fourth quarter. But if the third quarter numbers are any indication, the second quarter numbers are an indication, it seems that revenge spending is still alive and kicking. And we're not just talking about revenge spending with consumption, because we still see that happening, but in terms of capital formation as well. I mean, a lot of the pent-up activity in construction, and as well as investment plans that people had that have been put off for 3 years, people are just sort of taking higher rates, higher inflation on the chin and saying, we have to build this house, or we have to invest in this new commercial building. So it's lasting a bit longer than I expected, and it can last a bit longer. But one thing that we're looking at is that savings, people have been dipping into the savings, and they're not able to build them up again. So, yeah.
Yeah, that was my next question. Let's go through some of those points that you mentioned. So let's talk about inflation. High inflation, surely 7.7 in the last sprint, but is it or is it not eating into consumption on a net basis? Because I personally feel the pinch. You said people are dipping into the savings, but looking at the third quarter corporate earnings, looking at the traffic, the malls, the restaurants, I'm going to be reporting later on the Jollibee earnings that are pretty stellar. I mean, that doesn't look it. So does that mean that inflation, as high as it is, has not eaten into growth?
Yes, surprisingly. In the past, the last time we saw inflation at these levels, 2018, we saw a stark drop off in household spending, especially on stuff like that, restaurants, more of the discretionary spending came down. But in an era of everyone just getting out of the pandemic and being stuck at home for 2 years, I think people are just the revenge spending party continues. I mean, we're taking all this high inflation and we're feeling the pinch for sure. I mean, I'm feeling it, you're feeling it, everyone's feeling it. But we just continue to spend and dip into savings a bit more. So I'm not sure how much longer this can last, but
Okay.
it's continuing for a bit longer than expected.